speaking of top picks, one of the factors that you've been watching for, of course, is valuations and the fact that you've seen a lot of stock price movement on the downside. In fact, a number of companies have corrected price-wise despite earnings upgrades. My colleague Somit is here to tell you about this. In this kind of a market, Somit, where even a small miss is punished, in this case, even upgrades are getting punished. Why is that?
Well, could be most likely because of the macro reasons that we are seeing. If you look at in the last 5 months, Nifty has corrected by nearly 12%, while the correction has been much sharper when it comes to mid and small cap. Mid cap has corrected by nearly 19%, and small cap is technically in the bear territory. It has corrected by nearly 22%. Now, what were the reasons? Most likely macro FIS sell-off is firstly the main reason. Then there is uncertainty around the Trump tariff, relatively higher valuations, weakening global and domestic macros, and currency depreciation. The only reason that was much specific to India was the cut in Indian companies' earnings. In fact, if you look at the Nifty 50 companies, FY25, we started the year with an earnings growth expectation of around 13%, and now we are expected to see an earnings growth of just 5%. So that is largely one of the major reasons. And we look at the BSE stocks that are listed on the BSE. Nearly 5,684 stocks are listed on the BSE, and of this, 3,446 stocks have seen a decline in the last 5 months. And if you look at the NSE 500 number, 458 stocks out of the 500 stocks have seen a decline. But all these stocks that have seen a decline, not all of them have seen a decline just because of the cut in earnings or a slowdown in earnings that is expected. In fact, most of the stocks have seen a PE derating because of macro reasons, despite the fact that their earnings have been upgraded not only for FY25 but for FY26 as well. To start off with, Nalco, 73% upgrade in the FY25 EPS and 43% upgrade in their FY26 EPS. Despite that, we have seen their valuations fall by nearly 43%. Now, the reasons behind the EPS upgrade is largely given the fact that prices were higher, volumes are expected to be on the higher side, and also their new plant is going to come up, which will aid to more volumes. For Avalon Tech, is the new clients that the company has been getting, their excellent performance, and in fact, the company also upgraded their guidance, and hence we are seeing their FY25 and FY26 EPS get upgraded by around 10 to 25%, and despite that, the P has derated by around 21%. For VRL Logistics, the EPS has been upgraded by around 32% for FY25. FY26 not much of an upgrade, just 2%, but despite that, a 32% drop in the valuations of VRL Logistics. For Arvind Smart, it is the huge land bank that the company has and a huge potential going forward, which has led to this upgrade in FY25 and FY26 EPS, but despite that, a 43% downtick when it comes to valuations. For GNTD, 28% and 15% upgrade in their FY25 and FY26 EPS, but 37% drop when it comes to valuations. Apart from that, there are stocks like Brigade, MCX, PG Electroplast, Lupin, and Nuvama Wealth, which have seen an EPS upgrade for FY26 and FY25 anywhere between 7 to 19, 41% in fact, and despite that, their valuations have come down by nearly 23 to 44%. So it's difficult to say, or I can confirmly say whether these stocks are safe haven, but as and when the macro situation improves, these stocks could be looked upon given the fact that their EPS have been upgraded, so there is no disappointment, at least from the earnings side for these companies.
Just to follow up on that, arithmetically, what you're saying is that the decline in the price to earnings multiple is on account of a combination of the increase in the EPS projection for the next year, that is 1 year forward, as well as a potential but not necessary erosion in the price, right? So it's possible that in certain cases the price has fallen less than 10% or less than 5%, and still you've seen a major erosion or a drop in the price.
Right, the price fall could be less than 10% as well, but given the fact that the EPS upgrades for these companies are much higher, the valuations have derated in a bigger way. So that could be looked upon given the fact that earnings are at least stable for these companies.
It's a fair point. And it's an interesting one, Neeraj.
Very interesting. Good to know that while Q3 was a bit of a recovery, nothing dramatic, there are some in which actually FY25 and 26 both numbers have seen an upgrade, and that is actually a really interesting thing. In fact, just before we get to Nilesh Jain, Alex, would love to get in Nirav Asher on this list of companies, Nirav, wherein there has been actually a serious earnings upgrade that has come in into some names. You probably heard Somit speak about these. Anything that stands out for you from this list?
Well, I think I would be very cautious at this point of time because we've seen some companies, it's been such a fluctuating fortunes that suddenly the guidance has gone upside down. So I think I would like to quote one company called Aircon International, where where the commentary has been so disturbing that you are making a 7%, 7.2% net profit margin, and suddenly the company talks about a 1.5% to 2% fall in the margins, decline in the margins going forward, and no confirmation whether there is going to be an improvement in the margin also. They are hinting at a continuous decline in margins going forward. So we've seen quite a few instances of this sort. So I think while there have been upgrades, but suddenly the whole picture has turned upside down. So we would be very cautious before going in for or believing in this kind of commentary, especially in this volatile scenario.